Hello. Yes, good morning, everybody. I hope you can hear my voice and also see my screen clearly. So today's webinar basically will build on what we mentioned some few days ago. You can remember there's a time in the past where we talked about correlation. We defined correlation. Yes, good morning, everybody. So we said that correlation is when certain pairs of the same base currency or quote currency does the same thing around the same time. So basically, we'll build on what we said at that time. We'll look at some of the symbols which are positive correlated and some of the symbols which are negatively correlated. And then we look at the best way you can trade them so that you get the best out of the market. So the first thing you need to understand is what currency pairs stands for. Look at this. We have this Euro USD. So USD as it is, you can see this. We have two different economies being compared. We have the European economy and we have the United States economy. So when you put this together, you get Euro USD. And the first one which you have this, the first symbol, the first currency is Euro. The next one is the US dollar. So this becomes the base currency. This becomes the quote currency. The same thing applies with when you have GBP USD. The GBP is the base currency. The USD is the quote currency. So if, for instance, the definition of correlation is when we have several symbols of the same base currency or quote currency suddenly doing the same thing. That's when we say that they are positively correlated. But if we have several symbols which has maybe the same base currency, some doing exactly opposite what the others are doing, then we say that those that are doing opposite, they are negatively correlated to the one that are doing the same thing. Okay. So the first thing you need to understand is between these two, this one and this one here. I'll upload them on my screen. And then I'll upload also the NZD-USD. So these two charts basically always do the same thing. So for instance, if I have like a pin bar here, if I want to trade correlation, I check if maybe there's a pin bar here on a given time frame, like on a 4-hour chart. Then I also check if there is another pin bar on the same chart on the same time frame at the same time on this symbol here. Like when we had this one, look at this pin bar here. This one. There was this downtrend, and then it had a pin bar here. This was like a place to buy from. And then if you check the next symbol around the same time, so this was on it's on 28th of January. So we also check 28th of January and see should be somewhere here. So look at what happened. While you were having like a pin bar here, which is red in nature, we had the same pin bar here, but it's green in nature. So ultimately, you can see that the price eventually went to that direction. The price eventually just headed straight to the upper side, the same way it did here. So one thing, if I had to trade these two symbols, I had to trade NZD-USD and AUD-USD. When I see the pin bar here, and I see the pin bar here, I'll pick a buy position. I'll draw a line there, so I'll pick a buy position here, and then I'll pick another buy position here. I'll pick a buy position here, then I'll pick another buy position here. My stop loss is here, and then the stop loss, this is where the whole thing comes in about correlation. So when, for example, if the price goes below the low of this pin bar on one pair, and the price does not go below the low of the previous of this candle here on another pair, then you don't exit out of that trade. So we only step out when this one AUD and AUD USD is below the low of this candle, and at the same time this one SDD USD is also below the low of this candle. That's the moment when we step out. We step out when the same thing has happened on all those symbols. So remember, when we had a buy here, we entered this buy based on this pin bar, and we also entered this buy here based on this pin bar. And since these two are positively correlated, you don't just enter one and leave the other one, and don't just exit one and leave the other one. And since the stop loss should be here, somewhere here, when you step out of, like, that is when the candles begin to get below this low, you check and ensure that the same thing is happening here. If we are below this low and we're also below this low, then we step out of all those trades. Does that make sense? Okay, there's another pin bar here which looks really interesting. Let's see. We had a pin bar here. So this was when? This was on 3rd of February. We had a pin bar, this one. So this was supposed to be a sell, but you don't sell unless NZD is showing the same thing. So we have that. You can see this was 3rd of February. We have the same thing, 3rd of February. There's a pin bar. And then after the 3rd of February, there is a pin bar. So look at what happened here. When we had this pin bar, the price failed to hit this level here. It didn't hit this high. But when we had this pin bar here, the price actually went up and even tried hitting the high of that candle. So if you are that person who's just trading one symbol, like you're trading just the NZD-USD, you took a sell here, and you had a stop loss here, you are actually stopped out of that trade. So this is the main reason why you need a correlation. You need to trade correlation, because while one symbol will be stepping you out, will be showing you they're supposed to exit, the other one will be showing you that no, we are yet to exit. We are still in that trade. So we'll take a sell. We wonder what happens if the price above this high, at the same time the price above this high, then that's when you step out. But if only one is above the high, we don't exit anything. The next example is this pin bar. We have a very good sell pin bar here. AUD-USD, we have the same pin bar here. So this is 2nd of February. The same thing, this is 2nd of February at the same time. So you can see that if you took a sell here, it went your way. If you took another sell there, it still went your way. So this is the main reason why we trade correlation. We want the same thing to happen across the board so that we can pick a position. And the other thing you can see here, we have like so as I was saying, we have a very good pin bar here. This was around 31st of January. You check the same thing around 31st of January. Okay. So you can see here that during immediately after the 31st of January, we had a very good pin bar here, but we didn't have the same pin bar on NZD-USD. So Let's check time. This is at 8 in the morning. And then let's see. So look at what happened. Look at what happened here. Well, we had almost a perfect pin bar here, which pushed price to the upper side. There was no similar very good pin bar here. This is just a normal candle which is pointing upward. It doesn't indicate, it doesn't show that there's enough pressure, but it indicates that the price may likely continue upward. So we won't consider this as positive correlated, but we'll check this here. So this was February 1st. Let's see, February. There is no pin bar. So we had a pin bar here, but there is no pin bar, so that's not correlated. And then here we had a bullish pin bar. When was this? This is 1st of February 12th. 1st of February 12th, we had a pin bar. So this is pointing upwards. So if you bought these two at the same time, you are actually good because the price actually went our way. And the next one, I don't see any other good pin bar. Let's look at this, where it looks like we had a pin bar. The price went slightly down before going up. Let's see if the same was there. So this was around February 7th, or in the morning. You can see there was no pin bar, so we actually could not have solved this if we were looking at these two symbols at the same time. So basically, this is the reason correlation is very, very important. If you want to know exactly when trading, you're not likely to lose, is ensure that you're looking at correlated pairs. Just ensure that you're checking for correlation before you enter any position. Like I mentioned here, it's a pin bar. And there is one thing which you can see here. For example, we had a very good resistance here. We had a very good resistance level here. You can see that the price used it as a resistance. Then there was this breakout here. So as it is now, the price is still above the same place. But if you check NZD-USD, we have almost the same resistance, but the price has not gone beyond it. So what this means is that we are likely to see the NZD-USD actually continue up and break above 0.66708. So as it is now, we have here resistance, we have here resistance. The price may also likely break out above this level because the AUD-USD has already done the same thing. So this is the main reason you're supposed to trade correlation. It helps you gauge what is happening on two symbols at the same time. Does that make sense? Okay. So that should bring us to the end of today's webinar. I'm sorry, today I'm having a bit of a problem. I'm having an extreme sore throat. I think we'll leave it there. I will meet again next week at the same time. So thank you and see you.